Wow, you've really gone all out this time. Mahindra and Mahindra financials, AGM notices, and even the auditor's reports. Someone's been doing their research.
You're not kidding. I think we have enough here to do a whole deep dive on Mahindra and Mahindra.
I'm game if you are. What do you think? Can we figure out their game plan from all this?
I think so. I mean, this is a pretty comprehensive set of documents. We should be able to get a good sense of their financial health, at least, and maybe even get a peek at their future plans.
Okay, so let's start with the basics. Their 78th annual general meeting was back on July 31st, 2024. But before we get into that, most people know them as a car company, but they do a lot more than just cars, don't they?
Right. They have their hands in a bunch of different industries.
So break it down for us. What are these different segments they're operating in?
All right, so they have five main segments.
Yeah.
Automotive, which is probably what they're most known for. Then farm equipment, financial services, industrial businesses, and they've even got consumer services.
So they're not just building cars and tractors, they're also lending money and getting into consumer goods. That's interesting. And speaking of interesting, there's a lot of talk in this AGM notice about leadership changes. Lots of new faces, and some familiar ones, too.
Yeah, there's definitely been some shuffling at the top. Looks like they've got some new appointments and reappointments, and even a new group CEO and managing director starting next April.
Okay, give me the rundown. Who are these people, and what are their roles?
All right, well, first up, we've got Mrs. Padmasree Warrior joining the board as an independent director. Then there's Mr. Ranjan Pant and Mr. Satpal Banu coming in as non-executive directors.
Hold on, Mr. Banu. Does he represent someone? I feel like there was something about that.
Oh, you're right. He represents the Life Insurance Corporation of India, which, might be a sign they're looking to boost their financial services operations.
Good catch. Okay, what else?
Well, Mr. Haygrave Khatan and Ms. Shika Sharma are both sticking around as independent directors.
Familiar faces? Good to have some continuity.
Yeah, I thought so too. And one thing that jumped out at me is that both the new and returning folks are appointed for 5 years. That's a pretty long commitment, isn't it?
Yeah, 5 years is a pretty significant chunk of time. It suggests they're in it for the long haul. What about this new CEO? Who is this person taking the helm?
His name is Dr. Anish Shah. And actually, he's not exactly new. He was reappointed, but his title is changing to Group CEO and Managing Director come April 1st, 2025. And there's also Mr. Rajesh Jajurkar, who's been reappointed as Executive Director and CEO, Auto and Farm Sector.
Okay, so a lot of strategic moves happening at the top. But to really understand where they're going, we need to look at their financials. And luckily for us, you've provided us with both standalone and consolidated financial statements. What's the difference again? And why do we care about both?
So standalone statements only focus on Mahindra and Mahindra's operations, but the consolidated statements, they include all their subsidiaries too, so you get the full picture.
So it's like looking at a single tree versus the entire forest.
Got it. Okay, so what were some of the most interesting things that popped out at you when you were going through these financial statements? Any big surprises?
Well, one thing that really jumped out at me was the revenue growth in their automotive segment. Just in their standalone figures, it went from 59,302.77 crores in 2023 to 73,513.49 crores in 2024. That's a pretty big jump.
Yeah, that's not too shabby at all. I mean, I knew they were doing well, but that's pretty impressive growth. What about the consolidated statements? Did the automotive segment show some more growth there?
Yeah, actually, even a little bit more. The consolidated statements show the automotive segment revenue going from 61,545.73 crores to 76,155.98 crores. So yeah, they're definitely doing something right over there.
Wow. All right, so automotive is booming. What about the other segments? Anything else catch your eye?
Yeah, one segment that I thought was really interesting was their industrial businesses and consumer services segment. It had some pretty big discrepancies between the standalone and consolidated numbers. Okay, I'm intrigued. Tell me more. What kind of discrepancies are we talking about?
Well, in their standalone statements, this segment brought in 2,343.60 crores in 2023, and then went up to 1,918.60 crores in 2024. But in the consolidated statements, it's a whole different story. Those figures are way higher, 19,028.20 crores in 2023, and then 17,719.10 crores in 2024. It's a huge difference.
It's a massive difference. What's going on there? What's happening in those subsidiaries that's driving those numbers up so high?
That's the million-dollar question, isn't it? It makes you wonder what's going on behind the scenes.
Yeah, it definitely makes you curious. Like this segment has a whole secret life that we're only getting a glimpse of. Like there's a whole other world within Mahindra and Mahindra that we haven't explored yet.
Right, and it really highlights how important it is to look at those consolidated statements. You get a much more complete picture than just looking at the standalone numbers.
Agreed. It's like looking through a keyhole versus having the whole door wide open. Okay, so we've got a booming automotive segment and a bit of a mystery surrounding this industrial businesses and consumer services segment. What else should we be focusing on?
Well, there's one more thing that I think is worth pointing out. Remember how we were just talking about how the consolidated statements for that segment are so much bigger than the standalone ones? Well, the auditor's report actually adds another layer to that.
Okay, now you really got my attention. Spill it. What did the auditors find?
So get this, they weren't able to audit all the subsidiaries in that segment. The report specifically mentions a few that were excluded from their review.
Wait a minute, subsidiaries that weren't reviewed. Why not? What's the deal with that? It's not exactly a good sign when parts of a company's financials are shrouded in mystery.
Right. It kind of makes you wonder what they're trying to hide. The report doesn't go into detail about why those subsidiaries weren't audited, but it definitely raises some red flags, doesn't it?
Yeah, it definitely does. I mean, transparency is key when it comes to finances. All right, so we've got high growth, we've got mystery, and now we've got some potential red flags. What about Mahindra's overall stability? What do those financial ratios, those vital signs tell us about their financial health?
Well, there are definitely some things to keep an eye on, but overall, they're looking pretty solid.
All right, I'm ready to dive into the world of ratios, but try to keep it simple for us non-accountants, okay?
No problem. I'll try to keep it as painless as possible.
I appreciate that. So which ratio should we start with?
Let's start with their debt-equity ratio. It's a good indicator of how much debt a company is using to finance its assets compared to its equity. Think of it like this. If Mahindra and Mahindra were a homeowner, their debt-equity ratio would be like their mortgage compared to the value of their house.
Okay, I'm following. So what does Mahindra and Mahindra's mortgage look like?
Well, their debt-equity ratio is actually really low, only 0.03, which is a good thing. It means they're not relying too heavily on borrowed money. They're mostly using their own equity to finance their operations.
So a low mortgage and a lot of equity in their house. That sounds like a pretty good position to be in.
Mm-hmm.
What about their ability to actually pay back that debt? Are they making enough money to cover their interest payments?
That's a great question, and that's where the interest service coverage ratio comes in. This ratio essentially tells us how much money they're making compared to their interest expenses. And in Mahindra's case, their interest service coverage ratio was a very healthy 55.78 in the most recent quarter.
Wow, 55.78. That means they're generating way more than enough cash to cover their interest payments. That's reassuring. Are there any other ratios that we should be looking at? Any warning signs?
Well, there are a couple that are worth keeping an eye on. Their debtors turnover, for example, has been fluctuating a bit. This ratio measures how quickly they're collecting money from their customers.
Right, so if they're selling products but not getting paid on time, that could be a problem, right? What were their debtors turnover numbers?
So in 2023, it was 15.28, which then went up to 16.2 in 2024. But in the most recent quarter, it dipped a little bit to 15.17.
So up and down, not exactly a steady trend. It's not a huge cause for concern, but definitely something to watch, right?
Yeah.
What could be causing those fluctuations?
It could be a few things, like maybe changes in their customer base, or maybe they're giving customers more time to pay. Or it could even be that the overall economy is making it harder for people to pay their bills on time.
That makes sense. It's
Yeah.
all connected, isn't it? What about their inventory turnover? What's that telling us?
Inventory turnover measures how efficiently they're managing their inventory. You don't want to have too much stuff just sitting around.
Right, because that ties up cash and can lead to losses if the inventory becomes outdated or obsolete. So how are they doing in that department?
Their inventory turnover was 5.24 in 2023, then it dipped to 4.74 in 2024, and it stayed at that level in the most recent quarter. So a little bit of a dip there, too.
Interesting. So we're seeing some fluctuations in both their debtors turnover and their inventory turnover. I wonder if those unaudited subsidiaries could be playing a role in that.
It's definitely possible. It's something we'll need to keep in mind as we dig deeper into those segments.
Agreed. It's all about connecting the dots and understanding the bigger picture.
It's pretty amazing how much information we can glean from all these different reports. You know, the leadership changes, the financial statements, even those little notes from the auditors. They all paint a more complete picture of Mahindra and Mahindra. It's like piecing together a puzzle.
I like that analogy. And right now, I'm really curious about the piece of the puzzle that represents their automotive segment. We've seen some pretty impressive revenue growth there, but I'm wondering if that's translating into actual profits.
Well, let's take a look. The standalone statements tell a pretty compelling story. Their automotive business made a profit of 6,199.45 crores in 2024, which is up from 2,819.05 crores in 2023. That's more than double their profits in just 1 year.
Wow, that's incredible. So not just growth, but accelerated growth. What about the consolidated statements? Do they tell the same story?
Yeah, the consolidated statements show a similar trend. Their profit jumped from 6,057.12 crores in 2023 to 11,268.64 crores in 2024. So yeah, their automotive segment is definitely a major profit center for them.
It makes you wonder what's driving that success. Is it a specific model that's selling like hotcakes? Or maybe they've tapped into a new market?
It's a good question. Unfortunately, these financial statements don't give us that level of detail. We'd have to look at other sources to really understand what's behind those numbers. Maybe some marketing materials or industry reports could shed some light on it.
You're right. Sometimes you have to go beyond the numbers to get the full story. But for now, let's shift gears and talk about their farm equipment segment. It may not be as glamorous as the automotive sector, but it's still a big part of their business.
Absolutely. And it's a crucial part of India's agricultural economy.
So what's the financial picture for their farm equipment segment? Are they seeing the same kind of growth and profitability as automotive?
Not quite. The consolidated statements show that their farm equipment revenue actually dipped a bit in 2024. It went from 34,870.07 crores in 2023 to 33,474.15 crores in 2024.
Hmm. A slight dip in revenue. Does that mean they're losing ground in the farm equipment market?
Not necessarily. Remember, we're looking at consolidated figures, so the performance of their subsidiaries could be affecting these numbers. Plus, you have to consider things like weather patterns and government policies that can impact the agriculture industry. But here's the interesting part. Even though their revenue dipped, their segment profit actually increased. It went from 4,326.62 crores in 2023 to 6,157.20 crores in 2024.
Wait, so revenue went down, but profit went up. It's
Yeah.
interesting. How is that possible?
It suggests they're doing something to improve their margins. Maybe they're focusing on higher margin products, or they've found ways to cut costs. We need more information to know for sure.
Another financial mystery. It just goes to show that you can't always judge a business by its revenue alone. You have to look at the whole picture. Okay, so we've got a high-growth automotive segment, a farm equipment segment with some intriguing profitability dynamics, and that mysterious industrial businesses and consumer services segment with its unaudited subsidiaries. What else should we be considering as we try to assess Mahindra and Mahindra's overall financial health?
Well, I think it's time to revisit those key financial ratios we talked about earlier. They can give us some more insights into their financial strength, efficiency, and potential risks.
All right, let's dive back into those ratios. We already talked about their debt-equity ratio and their interest service coverage ratio, which both look pretty good. What are some of the other ratios we should be paying attention to?
Let's take another look at their debtors turnover. Remember, that measures how quickly they're collecting money from their customers. And we saw some fluctuations in that ratio, so it's worth digging a little deeper and seeing if those fluctuations are consistent across their different segments.
Good point. It's easy to get lost in the overall numbers, but sometimes the segment-specific details can be really revealing. Remind me, what were their debtors turnover numbers again?
Okay, so in 2023, it was 15.28. Then in 2024, it went up to 16.12. But in the most recent quarter, it dropped a little to 15.17.
Right, so a bit of a mixed bag there. What are some of the questions we should be asking as we try to understand those fluctuations?
Well, are those fluctuations consistent across all their segments? For example, is the automotive segment having trouble collecting payments, while the farm equipment segment is doing just fine? We also need to look at their credit policies and the overall economic environment. Are they offering more lenient payment terms to boost sales? Are their customers struggling to pay their bills on time because of a weak economy? It's all about understanding the context.
Right, it's not enough just to look at the numbers. You have to understand the story behind the numbers. And speaking of stories, let's talk about their inventory turnover.
Right, that's another important one. Remember, that tells us how quickly they're selling their products and replenishing their stock. It's a measure of how efficiently they're managing their inventory.
Yeah, we don't want them sitting on a mountain of unsold cars, tractors, or financial products. So refresh my memory. What were their inventory turnover numbers?
Okay, so it was a 5.24 in 2023. Then it dipped a little to 4.74 in 2024, and it stayed at that level in the most recent quarter.
So a bit of a dip there as well. Is that a cause for concern?
Well, it depends. The ideal inventory turnover ratio can vary depending on the industry. So we'd need to compare Mahindra and Mahindra's numbers to their peers in the automotive, farm equipment, and financial services industries to see how they stack up.
Good point. We need to consider the context. But it is interesting that we're seeing fluctuations in both their debtors turnover and their inventory turnover. I wonder if there's a connection there. Could those unaudited subsidiaries be playing a role?
It's definitely possible. It's something we need to keep in mind as we continue our analysis.
Okay, so we've got some potential red flags to watch, but we also need to remember that their overall financial performance seems pretty solid. Let's talk about their operating margin. How are they doing in terms of profitability?
That's a key metric. The operating margin tells us how much profit they're making from their core operations before we factor in things like interest and taxes. Think of it like this. It's the profit they make from their day-to-day business of selling cars, tractors, and financial products before we get into the nitty-gritty of financing and taxes.
Okay, so it's a measure of their fundamental profitability. How's their operating margin looking?
Well, it's been hovering around 12–13%, which is generally considered pretty healthy for a company like Mahindra and Mahindra. But we need to dig a little deeper and see if there are any significant variations between their different segments.
Right, we need to break it down and see what's happening in each part of their business. Are there any segments that are performing better than others?
Exactly. We want to see if there are any segments that are really driving their profitability or if there are any that are lagging behind. And we also want to see if those unaudited subsidiaries are having any impact on their overall operating margin.
It's like we're peeling back the layers of an onion. Each layer reveals something new.
I like that analogy. And I think our next layer should be to take a closer look at those unaudited subsidiaries. They're a big question mark hanging over our analysis, and I think it's time to try and figure out what's going on there.
I'm with you. Let's put on our detective hats and see what we can uncover.
We've been looking at all these segments, but there's one we haven't really talked about much yet, their financial services segment. And looking at these consolidated statements, it's not exactly small potatoes.
You're right. We've been so focused on cars and tractors that we kind of glossed over that whole financial services thing. Their revenue went from 12,613.69 crores in 2023 to 15,652.02 crores in 2024. That's nothing to sneeze at.
Nope, not at all.
Yeah.
So what are they actually doing in financial services? I mean, what does that even include?
Yeah, good question. What exactly are they offering?
It looks like they're offering a whole bunch of stuff. Retail loans, commercial loans, they're financing SMEs, they're even in housing finance, and then there's mutual funds, insurance broking. It's quite the mix.
So they're really going all in on financial services. They're not just financing their own products. They're playing the whole field. That's pretty smart, spreading their risk, diversifying their portfolio. But the financial services industry, that's a whole different ballgame. Lots of regulations, inherent risks. What do the auditors have to say about all this?
Well, they didn't find anything particularly alarming about their financial services segment, but they did stress the importance of strong internal controls and risk management, especially with all the regulations and the ever-changing nature of the industry.
Yeah, that makes sense. It's a sector that requires constant vigilance. You can't afford to be complacent. So no major red flags there, but a reminder to stay sharp.
Exactly. And it's important to remember that financial services are closely tied to the overall economy. Things like interest rates, inflation, economic growth, all of that can have a big impact on their business.
Right. So even though their financial services segment is doing well right now,
Yeah.
they need to be prepared for any economic headwinds that might come their way. It's like sailing a ship. You got to be ready for those storms.
Exactly. You got to keep your eye on the horizon. Okay, so we've looked at all 5 segments. We've analyzed the financials. We've dissected the ratios. We've even scrutinized those auditors' reports. What's the final verdict? What's your overall impression of Mahindra and Mahindra after this deep dive?
It's been quite the journey, hasn't it? I have to say, I'm pretty impressed. They're a company with a solid foundation, a diverse portfolio, and a clear vision for the future. They've shown they can adapt and innovate. They've expanded beyond their traditional manufacturing base and established themselves as a force to be reckoned with in the financial services world.
I agree. They're definitely not afraid to take risks and try new things, and it seems to be paying off. But like any company, they have their vulnerabilities. Those unaudited subsidiaries, for example, they still make me a little uneasy.
Yeah, those unaudited subsidiaries, they're like a loose thread in an otherwise well-woven tapestry. They create a bit of uncertainty, don't they? How do we weigh that risk against their otherwise strong performance?
It's a balancing act, isn't it? We have to look at the whole picture and make a judgment call based on all the available information. But it definitely highlights the importance of due diligence. You can't just take things at face value. You have to dig deeper and ask those tough questions.
Absolutely. So if someone was thinking about investing in Mahindra or maybe partnering with them, what would your advice be?
I would say do your homework, don't just skim the surface, really dive into their financials, read those auditors' reports, carefully understand their different business segments, and be aware of the broader industry trends. Information is power. The more you know, the better equipped you'll be to make an informed decision.
That's great advice. Knowledge is key. Don't just jump in blindly. Be informed, be curious, and be prepared to ask those tough questions. Well, we've certainly learned a lot about Mahindra and Mahindra in this deep dive. I hope our listeners are feeling as informed and intrigued as I am.
Me too. It's been a fascinating journey. And remember, the learning never stops. There's always more to discover.
Well said. And on that note, we've reached the end of our deep dive into Mahindra and Mahindra. We've explored their strengths, analyzed their challenges, and gained some valuable insights into their financial health and strategic direction. Until next time, keep those financial statements handy. And remember, knowledge is power, curiosity is key, and the journey of discovery never truly ends.